February 27th, 2024. We got a measure move down from bars 1 to 3. Today down here, often when you get a spike on the opening range, you get some sort of measure move down. That's roughly where we went to. But I thought the more important magnet was on the daily chart. If you look at the daily chart, you'll see that the high of this bar, the bears who sold above this high, they didn't really have a chance to get out. They tried to scale in on this day and they got trapped. And they were trying to get out of that first entry around break even today, but really hard for them to do, right? So you can see here, it came within 2 ticks of that low. And generally when it comes within 2 ticks, you can consider the channel tested or you can consider the measured move point tested. But, if you were watching my video yesterday towards the end of the day, you know that I said 66.5 was going to be a pretty important price. And we ended up getting to the 67. And it was a midday reversal, right? So you get bar 42, 43 reversals relatively often. Another point I wanted to make about channels. Generally, channels on the 5-minute chart can last up to about 2 days. And this one, it essentially lasted 2 days just over the course of 3. So you can see we got a spike here and then a pullback and then maybe the start of the channel here. And then it ended down here. So 172 bars. And, there's 162 bars in over the course of 2 days since there's 81 bars per day. So, roughly about 2 days, the channel lasted there, which is, not surprising, right? So bar 1, bear bar closing near its low. It's a good bear bar, but we're in a bear channel. So when you're in this type of channel, traders are more interested in buying low and selling high rather than selling low and looking for the market to continue lower. Follow through for the bears on bar 2, but there's a tail on the bottom and it broke below the prior day's low. And I think the context on the daily chart, again, is important here. Do you want to sell below this bar? It's vaguely, it's a good bar, but you're expecting something disappointing for the bears today. Reason being, if the bears got another strong bear bar, then we might start to flip the market to always in short. And so it's unlikely that the bulls are going to let that happen. So this is, there's most likely going to be buyers below the low of this bar. And, you definitely don't want to test that on the 5-minute chart. So I would still be flat. And you get kind of bad follow through on bar 3, as you can see here. So buying pressure 2, more buying pressure 3. So disappointment for the bears. You could argue these tails form some sort of wedge on like a 1-minute chart, maybe a 2-minute chart. I don't know. I'm gonna look at a 1-minute chart. So I guess it would be parabolic, but you get my point. Follow through for the bears on 3. Disappointment on 4, as expected. You're expecting a pullback here. If you're selling, if you're looking at 3, do you think, oh my God, I got to get short. We're going to go so much lower. No, you're thinking you're going to get something disappointing. So the bears who are short for any reason are buying back their shorts, causing the rally on bar 4. Bar 4 is a bad low 1 short. So probably buyers below. You can see there were buyers below during 5. We get a doji bar. 5 is a double bottom with 3, but traders aren't going to want to buy above it. That we're probably going to get a lower high from 1. Why? Because 1, 2, and 3 were pretty, it wasn't the best thing in the world with the tail on 2 and 3, but it was strong enough that you expect to get a lower high. And it's interesting. If you had bought above 6, those traders made exactly 5 points, you can see, and then they scalped out. I would argue that it was more bears scaling in 5 points above 5, more so than bulls who bought above 5 scalping out, but I assume there was a little bit of everything. So follow through for the bulls on 6, not all that great. And then a big doji bar on 7. Sometimes 7 is a surprise bar, and you can see it kind of was today, but it ended up being a lot more sideways. 7, double top with 1, but do you really want to sell below this giant doji bar with huge risk? No, you don't. Disappointing follow through on 8, as expected, and so probably buyers. And then buyers below if we get there. And then 9, a bull bar. You could argue some sort of double bottom with over here, but the neckline is going to be 7 regardless. So you could argue it's a double bottom with 6. You could argue it's a micro double bottom with 8. Whatever it is, you know that the neckline is pretty much going to be the 7 high, which means that in order for me to want to buy, I'm going to want to see a strong break above the neckline, which is the 7 high. So when you get 10, 10's a good bar for the bulls, but they really want to see another good bull bar on 11 closing somewhere up here. And you get disappointment on 11 instead of that. Now, something important that the market is doing, you can look, it's forming a triangle. When the market's forming a triangle, it's generally a lot better to wait for a breakout with follow through than it is to take chances on bars like 12. Because, if it's going to get the breakout, a lot of times it's going to be, you're going to have a lot of chances to buy. So it's better not to buy above 12. It's better to wait and see. Because if you're buying, you're looking for probably a measured move, right? So if you're looking for a measured move, if 13 is a good bull bar, great, you can buy there. You still have plenty of profit potential left. Disappointment on 13, so not as many buyers above 12. It's the top of the 3-bar tight trading range, 10, 11, 12. Do you sell below 13? I don't think so. Tight trading range, I just wait. And you get surprisingly good bear bar on 14. 14 is probably an okay swing sell, but the context of the daily chart makes it a little worse, with the fact that we're probably not going that much further down today, and we're towards the bottom of this overall channel. So it's an okay swing sell below 14, but I was just in general more looking to buy. I thought we might have to get down to the magnet, but I thought in general traders are probably more looking to buy. 15, follow through for the bears. Can you sell 15? I guess my answer would be I don't know. Probably yes, because 14, 15 consecutive bear bars sell to close, but it's not really breaking out of anything. If you're selling, it's not really a big, you're not getting some big breakout. You wanted a breakout closing below here because it's possible, this is a breakout point. So you can see when we get below there, traders actually bought it instead. So you wanted 16 to be closing below here, and 16 is a lot, or 15 is a lot smaller than 14. So it's not as bearish as it could be. So is it probably theoretically reasonable? Yeah. But is it as good as it could be? Probably not. So, I don't think I don't know. It's kind of a tough decision, I think. And then you get outside up on 16. If you do sell below 15, you got to probably get out as 16 is turning up. And then you can see you get disappointment on 17. And the absolute worst thing you can do, right, is sell below 15, put a stop here instead of up here. Oops. Put a stop here instead of up here, because trading ranges run bad stops all the time. So if you're going to sell below 15, you either need to have a wide stop and be willing to scale in, or you need to probably exit like basically right above 15 or a little bit further. Because realistically, if you sold below 15, you want 16 to collapse, right? You want to see a big bear bar on 16 or some sort of follow through for the bears. You don't want to see a trade above 15. So I don't know, maybe potentially a stop even above 15 is okay. It's low probability for sure is the thing. Outside up on 16 and disappointment on 17 because bulls wanted 16 to close on its high. They wanted some sort of bar. They probably wanted a bit of a smaller bar. They were okay with the context of the outside bar, I think, trapping the bulls in or the bears in who bought below here. So they were, but they ran too many stops and the bar got too big and then it had a big tail at the moving average. 17, disappointment, runs those weak stops. Again, still forming a triangle here. Better to do nothing. 18, a bear bar, 18, a bull bar, inside bar, but not that good. Inside bar 19, so but really I would just rather be flat right now. Bear bar 20, but again, this is now a day where you need the traders to prove something to you, right? So this is now a day where if you want to get in on a specific side, those traders need to make a statement. And so you see 20, you should be thinking, well, let's see the follow through. And sure enough, bad follow through 21. Second leg down on 22, but buyers at the bottom of this buy climax, the 16 low. Bull bar 23, but we haven't had a really strong close above the moving average yet today. We've poked above it with a couple of closes, but the bulls have yet to put a definitively good bar above the moving average yet today. Additionally, this is a tight trading range, 21, 22, 23. So 23 is really not all that good unless you got a wide stop and you're willing to buy more below 23 during 24. So you can't buy above 23 and put a stop right here because that's just never going to go well. You can't even really put a stop below the day, I don't think, because if it gets there, realistically, there are more buyers than sellers, so hard to do. Probably buyers below 23, probably sellers above. Outside down 24, but probably buyers below. You can see the traders who bought above 23, they added below 23, and then during 25, they got out of their initial price at break even with a profit on their second entry, and that's what caused the selling on 26 was, the bulls selling out of their longs up here. 26, a big bear bar, but you can see bulls bought the new low. We've had so many good bull bars today that we are probably going to get a bull reversal at some point today, but you don't want to rush it. I've heard Brad say before that, it's never obvious when the market's going to reverse, but it's obvious when the market reverses. So you don't want to be trying to force yourself into reversals essentially, and you want to wait for the clear one, which, was probably something like this after the vacuum test of this magnet. So 26, but buyers down here, 27, inside bar, but overall disappointment, and another inside bar, 28. It's an II, but I don't want to buy anything here. I think that there have been too many sellers at the moving average too much. 29, a bull bar, but a tail on the top. 30, another bull bar, but a tail on the top. And the follow through on 31, pretty lackadaisical. It is a fully bull bar above the moving average, but it's closing below its midpoint. So, if you don't really want to be long here. Look at the tail on 28, 29, 30, 31, and doji 30, 31. So it's really not all that good. And we keep getting lower highs, right? Lower high, lower high. So probably lower high. and double top with 24. So really not all that great to be long here. It was possible that the bounce was going to start here, but if the bounce was going to start here, then maybe 31 is a bull bar closing near its high, or maybe 32 is a bull bar closing near its high. The point being, you don't need to be long yet. You can wait until you get the bull bar that you want to see and the follow through that you want to see. On these days, the worst thing you can do is keep trapping yourself into longs and keep punting money, basically. 32, a bear bar closing near its low. Can you sell it? I think it's probably an okay swing sell because bears have been selling the moving average so far today. But after 4 bull bars, it's kind of hard to want to take it. You can see on 33, we traded back to the 31 close. Traders sold, and we got essentially a doji bar. Follow through on 34 for the bears, but a tail. Reminder, this is a trading range. And more follow through on 35. But, I think the main thing you got to be thinking about when we get down here is look what bulls are buying the new lows all the time today. They even bought below yesterday's low, then they bought below this low, then they bought below this low. So, you expect they're going to buy below this low. So the traders who buy below here are probably going to be able to scale in and make money. And realistically, the traders who buy below 34 are probably going to be able to scale in and make money. So that's why you get such a disappointment bar on 36. Traders are buying back shorts quickly. Disappointment on 37. It's essentially a low one short, but not all that good. And then 38, a giant bear bar closing near its low. But do you want to sell this? You're selling on probably a lot of different channel lines. You're selling so low, and these bear bars today, generally everything's getting weak follow through, and this whole thing looks like a leg in a trading range. And if you're trading in a leg in a trading range, you probably want to be selling higher in this channel and looking to take profits down here. And that's what you get on 39. A low one short on 40. Maybe some traders take it, hoping to get to the magnet. Kind of disappointing follow through on 41. And a bear bar 42, this is getting steeper and more parabolic. You can see, the parabola forming. And then here, and then here. Oops. Come on. There we go. Here, and then here. It's bad drawing. But you can see it's getting more and more parabolic. 43 essentially vacuum tests the magnet and gets a huge reversal bar up, but I think 43 is way too big to buy above. And my other problem with 43 is there's a big tail above and a big tail below. So really not all that great. But where do traders end up buying? So, I've said it before, if the bar is too big and the risk is too big, what do traders do instead of buying directly above? They end up buying a 50% pullback, which is exactly what they did on 49. So follow through for the bulls on 44, but it's minimum follow through. It's a small doji bar. 45, big tail on the top. So doji 44, tail 45, not that great. Bear bar closing near its low 46, but probably at least a second leg up from 43, 44, 45. So I don't think 46 is a great sell at the moving average because of how strong 43 through 45 is. That kind of changed. There was an overshoot of the channel line. I think is a big difference. We were still kind of in some sort of bear channel or hazy bear channel on 32. So it was probably a better swing short. It's definitely not a scalp 32, I don't think, but it's better swing short versus something like 46. I think we've had the channel overshoot, and it seems more likely that the bulls have taken control. So not that great. And you get a second leg outside up 47, breakout above this high, but bad follow through. So we end up getting a big bear bar closing near its low 48. 49, a bull bar, test the 50% pullback. Bulls bought it. We've had a lot more bullish energy, and we're starting to get close above moving average. It's maybe an okay swing buy above 49. I think you might have trapped bears who sold below 48, hoping to get a big crash, essentially. Maybe you can buy above 49. Follow through on 50, but a tail. More follow through 51, but a tail. And I think 52 is better. After 4 straight bull bars, you know that we're probably going to break at least above this high. You'll have to see, but I think that's pretty reasonable to be long above 52, kind of hoping we start to get a vacuum test. And you get a disappointment bar on 53, but not a bear bar closing near its low. And then you start to get the vacuum test 54. 55, a bear bar closing near its low. Are bulls going to exit below 55? I think they probably will, because at that point we're probably getting back to the 53 high. And it could be a wedge, something like 1, 2, 3, or 1, 2, 3. But pretty tight channel, so we'll see. But I think bulls will exit below 55, which is exactly why it didn't trigger. Bulls bought the close, trying to keep it from triggering. 56, a doji bar. Again, bulls buy the close, and that's why you get 57, a bull bar closing near its high. Bulls buy above 57, and you get a good bar 58. This is a pretty tight channel, but look at how much trading range price action there's been. With this much trading range price action, we're probably not going far above the high of the day. We might have to get above the high of the day and close there, simply because the bulls will want to disappoint the bears on the daily chart. And in order for the disappointment on the daily chart, traders probably need to get a bull close. So maybe, So big bar like this, my point being buying above 57 with all this disappointing, trading range price action, traders are probably going to end up taking profits. And that's what happens on 59. Traders buy maybe a 50% pullback, something like that on 59, and then they scalp it. And that's what causes the drawdown on 60, but traders buy there. You can see, what is 59 and 60 really? Down on 59, up on 59, down on 60. And then, we started to go up on 60 through 61. So it's a two-legged correction and a reversal up. Good bull bar 61, but probably getting back to the 60 high. I think bulls get out below 62. Bear bar closing near its low, second reversal down, and you get disappointment for the bulls. You can see some bulls scaled in lower, and they got out around break even on their first entry. The 61 closed with a profit on their second. Fall through 64. This is kind of the bottom of the range. And again, trading range is always running bad stops, right? So if you had bought, if you were holding through this, it's hard to want to keep your stop down here. It probably makes more sense to just get out here and look to buy again above a bull bar, because the same way they're going to run, poor stops up here, it's going to run stops below this. 65, a bull bar, but disappointing, and good follow through for the bull 66, but top of a channel. You can see, let's see the follow through. We've had bad follow through for bull bars everywhere up here. That's why you get disappointing follow through. Bulls long for any reason, exit below 69. And I would leave this alone. It's not surprising to me that we broke to a new high of the day on 69. It's not surprising to me that it failed initially either, but it's important that we got the close above, because that means on the daily chart, we're getting a disappointing close for the bulls, which could be, or for the bears, which could mean that, some bears might exit above this. I think that we will, we might have to test up above this high, but they'll probably be sellers if we do. I do think that we're going to end up going sideways down to the moving average. There's probably not much more left straight up on this bull move. It's only Tuesday, so the monthly chart, tomorrow's the last day of the month. The last day of the day, week, month, whatever, can often lead to, violent moves. I don't know if I have EOD, EOM surprises. November 30th, we got a big rally at the end of the month. You can see here, that's not as big, but moves at the end of the month. So you can definitely get moves at the end of the months. And then you can see here on, what was I going to say? Oh yeah. So stop entries, really hard day for stop entries. I think all of this is just kind of traps, maybe 15, maybe 14, maybe 15. But you got to get out pretty quickly. And then, maybe 32. And then probably, 49 is probably okay, but I would have probably personally waited till 52 and then 57. And that's pretty much it. So midday reversal. And yeah,